Okay, hi. It's Wednesday, I guess. It's the Facebook Live broadcast from Red Shoe Business Club, and I'm Mike Wright with Tax Right, and I want to welcome you. I'm using my desk uh, position today because I'm going to do some things that I don't want to have to write on the board. We're just going to look at a couple of topics because the subject for today is one that's very important for business owners. And that is, how do you make yourself a business? I titled it Rise to the Level of a Trade or Business because very frequently in tax court rulings, the issue is whether or not the business or whether or not the activity which is being described for the taxes is a business or not. You might wonder why that is so. Well, let me give you some background information very quickly. Under the tax code, and this has been the case since 1913, when the idea of an income tax caught hold and was supported by the courts and has continued now for 110 years. Ever since the very first income tax returns, the profits of a business were what was taxed, not the cash flow to the taxpayer, to the individual person, but to the business. And you have always been able to deduct business expenses. This is an important distinction because as the tax code has evolved over those 110 years, we have gotten to the point where the law takes very seriously the first line of the tax code, which comes from the constitutional amendment, which reinforced the ability of the government to collect income taxes. And that is the phrase, all income shall be taxed, regardless of the source it comes from. All income shall be taxed, regardless of the source derived. This is an important issue because the whole idea is that if all income is taxed, then it appears to be that everything that you bring in is taxable. Well, for an individual, that's the case. And that's why the law has added things like deductions. Over more modern times, I'm not going to go back to the history of these, but in more modern times, we've had things like mortgage interest deduction. At one point within the last 30 years, all interest for individuals was deductible. We have the phrase the standard deduction, which is a minimum amount that the government says, we would call it the safe harbor if it was in the law today. But the idea is that if you use this standard deduction, then no inquiry will be made over whether or not you're even eligible to take that amount, because by definition, you're eligible. The Tax Cuts and Jobs Act of 2017 established very high deductibles, standard deductions, which are inflation sensitive. And so over the years since 2017, they've gone from around $20,000 per individual up to around $24,000 per individual. These are substantial deductions, but the point is that those are the only deductions that you can take. You either take the standard deduction or you take the itemized deductions, and the Tax Cuts and Jobs Act of 2017 reduced the number of itemized deductions. It did away with the deductions for unreimbursed employer expenses that many salespeople were able to take advantage of over the years up until 2017. So the issue then becomes whether or not, what can we do to reduce the amount of money that is taxable? And the law also says that for a business, all ordinary and necessary expenses are deductible. It's not only that all ordinary and necessary expenses are deductible, but in fact, for purposes of coordinating that particular phrase with other pieces of the tax law, all ordinary and necessary expenses must be treated as if they were deducted, even if they were not. And that leads to some interesting issues that we may talk about at other times, but I'm not going to talk about today. The point is this: because of this special treatment of the expenses of a business, it is absolutely necessary that your activities be considered a business. Because if they're not a business, then the many of the expenses that you have aren't deducted, and so the total amount you bring in is taxable. If you do not qualify as a business, your activity is considered a hobby. And there is no special treatment for a hobby, except that if you receive income from your hobby, that income is taxable, but the expenses are not deductible. This was another change that the Tax Cuts and Jobs Act of 2017 implemented, because up until that time, the expenses that created hobby income could be deducted up to the amount of the income. You could never realize a loss from a hobby, but you could zero out depending upon the kind of expenses you had. Tax Cuts and Jobs Act did away with that. And now you must be a trade or business to be eligible to take these deductions. So it's important that you understand that you do the things that you need to do to make sure that you are considered a trade or business. So, what's the definition in the law of a trade or business? Well, let's take a look. I'm going to share the screen. This is why I didn't want to have to put this out on a form, because as you'll see, this is fairly complicated. This screen comes from the Internal Revenue Service's article on business activities. And the short form is this: a trade or business is generally an activity carried on for a livelihood or in good faith to make a profit. I want you to notice that in particular. It is for a livelihood or in good faith to make a profit. The facts and circumstances of each case determine whether an activity is a trade or business. Some of the important facts and circumstances used to make this determination include, and they mention, the regularity of the activities, the regularity of the transactions, production of income, and ongoing efforts to further the interests of your business. Those four things are vitally important for what we're doing: regularity of activities, regularity of transactions, production of income, and ongoing efforts to further the interests of your business. Now, I'm going to share a few things with you right now. I'm a real fan of reading the decisions of the tax courts, because the tax courts are different from the circuit courts, the legal courts, and they have authority over tax issues. Although sometimes if the taxpayer or the government does not like the ruling of the tax court, they can go into the regular justice system and sue there. And at another time, we may talk about some of those cases. But the tax court cases are particularly interesting because the administrative judges in the tax courts are tax specialists. They are people who have the same knowledge and the same understanding of the tax system as the IRS people do. And so when you see those two agencies pitted against each other, it can be very revealing. Well, in this area of item 4, the ongoing efforts to further the interests of your business, I like to cite a case about a couple that were operating a horse breeding ranch in Kentucky. And they continually lost money. And of course, they continually used those losses to offset other income, or perhaps to carry forward a net operating loss in their tax returns. Well, finally, the IRS came to them and said, "We don't believe you're operating a business. You've never made any money, and so we're not going to allow you to be a business anymore." And so the people had enough money from whatever source. They had enough money to go and take this all the way to the tax court. And so the case as presented was this: Yes, they were losing money, but over the years that they've lost money, they continually attended horse raising seminars, worked with horse raising associations to learn what they could about their business. They engaged and dismissed a variety of stable managers, people, trainers, different people who could help them improve the quality of the business that they were doing, to improve the business that they were charging money for. And all of these things went on for year after year, even though they were not making money. They continued to pursue a better understanding, a better plan, a better way to do what they were doing. Well, the tax court looked at all of those things and they agreed with the taxpayer against the IRS. And their particular reason was that these people had continually been trying to improve what they were doing in order to make a profit. It wasn't their fault that they did not succeed. Well, I mean, it was their fault that they didn't succeed, but it wasn't for lack of trying. And the tax code understands that that is true of any and all businesses. And so the ability, you may have heard the saying that you have to make money in 3 out of the last 5 years, or 2 out of the last 5 years if you're a horse breeder. Well, that's a rule of thumb only. The law actually says that you have to be a business. And we just saw what the IRS considers a business and what's the important feature of that business. And as I said, it's item 4 here, ongoing efforts to further the interests of your business. The article goes on to say that you don't actually have to make a profit to be operating a trade or business, but you do need to have a profit motive. Now, another day we'll talk about not-for-profit organizations, but for today we're talking about for-profit organizations. Your purpose in doing what you're doing is to, in good faith, be trying to make a profit. People ask me all the time for a list of what they can do, what they need to do, a checklist, if you will, to be able to call themselves a business. I'm sorry, I clicked the wrong button. I wanted to get back to this screen. Talk to people all the time about what it is to be a business. Well, I've just shown you the only checklist that there is in the idea of defining what a business is. And I've also zeroed in on what you need to look for. Regularity, both of activity, in other words, things you're doing to attempt to make a profit, and regularity of transactions, which means you're not just sitting back and saying, I'm in business, and then not interacting with the public in general. That you are producing some income. It might only be a pittance. It might only be a small amount of what you need to make a profit. But the fact that you're trying, these are all evidence of your good faith effort to make money. And the hobby issue I brought forth a few minutes ago is exactly the point here. Your purpose is to make a profit. Your purpose is not to engage in a pleasant activity. Even if that pleasant activity provides some good to people, there has to be a profit motive there. You'll also notice the law doesn't say how much of a profit. I'll tell you a story. I worked with a person this past week that was interested in talking to me about doing their taxes. And they thought that I would probably charge less than what their previous accountants charged. And I always take that with a grain of salt, because while I understand that my prices are in keeping with what a generally accepted level, I also know I'm not cheap. I'm not a discount guy. So I was concerned that they might have considered a price that's already lower than what I charge as too much to pay. So I asked her, and she told me that the last accountant they used charged $5,000 for their tax return. First off, I made sure that that did not include annual bookkeeping work and things like that. And she said, no, it was simply to prepare the tax return. And I said, well, that seems a little out of line to me, because my average price, again, with some disclaimers there regarding the size of their business, but I said mine would be roughly a tenth, or certainly less than a quarter of that. And she agreed that that was better. So, you know, whoever it was that was charging them before obviously had a much larger profit expectation than do I. That's something that you want to consider as a business owner. What is your profit expectation? If you want to be able to charge $5,000 for a tax return or for a consultation or whatever it is that you do, then you need to be able to show to clients that what you're providing is somehow unique or special. And we'll talk about this particular issue a lot as time goes on. But for right now, the point is this law, this concept of business is very flexible. It's open to a broad amount of interpretation. And what you're obligated to do and what your tax person is obligated to do is to be able to provide justification for what it is that you're claiming to be a business. You may have noticed in passing that page that I showed you earlier also mentioned part-time business. With the exception of a certain number of items, professional real estate people is the one that comes to mind, but there may be more. There is no time requirement for how much time you put into the business. So if you're doing a part-time business and you only spend 4 or 5 hours a week doing it, that can still be a business. The critical issue is the intent to make a profit? So even if you're doing something as a side hustle, if your intent is to make money, then it can be a business. Now, before I quit entirely, I want to talk about another issue. We did this from the standpoint of the expenses that you can use as deductions for a business. But there are also other advantages that you have from operating a business. One of the biggest under the regime of the Tax Cuts and Jobs Act is the qualified business income deduction, which in many cases, I won't go so far as to say most, but in many cases allows you to deduct 20% of the qualified business income for your business as a deduction over and above all other deductions on your personal tax return. That's something that's only available to pass-through businesses. And by pass-through businesses, I mean S-corps and partnerships. That's another plus with being in business. Another plus with being in business is the fact that you can own and utilize properties, share those properties with your personal and business life, and be able to deduct the business portion from your income, even while enjoying the personal benefits of the personal side of those items. And what I'm talking about there is things like shared premises, cell phones, computers, equipment, but all of these particular things that you need to, or that you have the advantage of using, you have to be able to have the records to keep track and prove that they're in fact accurate. So once again, I've spent the whole 15 minutes and then some. I think I'm going to stop saying that I'll get these done in 15 minutes. Looks to me like 20 is the minimum. But that's what businesses are, what to look for, how to make sure that what you are doing is in fact a business. Now, tomorrow, we're going to talk about something called the doctrine of economic substance. It's related to this, but it's not exactly the same thing. So join me tomorrow and we'll have a talk about that. And thanks for being with me today.